Good afternoon, everybody. Today, I want to give you an introduction to advanced Fibonacci time and price analysis. I imagine that some of you are already familiar with my work, or at least the basic Fibonacci work, but I'm going to give you a look at a little bit more advanced practices that I use with the Fibonacci ratios. And I will be willing to take questions at the end as long as there is some time. All right, let's get started. So why would you want to use this type of Fibonacci analysis? And it's because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. Now, before I get into all of the basic boring stuff, what I do want to show you is how it's working today, right here, right now. And this is basically a daily chart of NASDAQ cash. I basically do the timing work on the cash chart because I have more back data than some of the, outright future charts. So here, again, it might not make sense just yet, but I want to show you that we also do timing work. And one of the things that I do is I use Bob Miner's histogram from his program, Dynamic Trader Software. And what I'm able to do is basically show the program which swings I want to use in the timing analysis. And then in this case, what I did was I projected for the next possible high off of this low here on March 13th, and then also the second low here. And actually what happened was both of these, you had one that came in March 25th, 26th. You had the other one that came in just slightly different as March 26th, 27th. Now, the way that you use the histogram timing is that if the market is trading straight up into timing, you're going to anticipate a possible reversal back down. But if it's trading straight down into the histogram, then you're going to anticipate a reversal back up. So what we did just see today was a failure after making the high on March 25th, which was directly within this time window for a high. And if you were watching the markets today, you know that we had a very healthy reversal that started this morning to the downside. Okay, so timing is definitely worth watching. It doesn't work 100% of the time, but when it does work, it's definitely worth knowing. I mean, if you're trading and you're long and the market's going straight up, you want to know that you're supposed to ratchet up your stops. So I just wanted to kind of, give you a really good example up front with the current markets before I get into more of the basic stuff here. All right, let's move on. Okay, so as far as this analysis, it works on any time frame and essentially any good market data. For example, I can't really do a daily chart if I only have 10 days worth of data, but on most markets, I mean, I do the S&P, I do multiple stocks. I have done some Forex in the past, and I've also done Bitcoin, and ETFs, and it works on most of those as long as there's good market data. Another example that probably wouldn't work is penny stocks. So again, I have applied this method to stocks, ETFs, futures, and the Forex markets, and then I need to add in there, Bitcoin and Ethereum. Now, it's also an excellent methodology to use with option strategies. You can see things in the market that you will never see using indicators alone by using this work. All right, whoever's not familiar with the basic Fibonacci numbers, I mean, this is what we're typically looking at. This is the Fibonacci number series where you get the next number in the series from adding, the prior two numbers. So 3 plus 5 equals 8, 34 plus 55 equals 89, and so on as it goes out to infinity. Now, I'm not using the Fibonacci number series for the actual work, but I'm using the ratios derived from the number series to do the actual analysis. Now, what's important about this is that the golden ratio is in between these numbers, okay? Basically, 21, which you see right here, times the 1618 gives you 33.9, which is essentially 34. But that means that 1618 is the ratio that's in between these numbers, okay? let's take a look at, all right, the Fibonacci ratios that I use derived from that number series are 382, 50%, 618, 786, 100%, 1.272, and 1.618. Some people will use some other ratios, but that's what I use. Occasionally, if it's a very large swing, I will also use the 236. I also use 2618 as my third target for any trend trade setups. And every once in a while, or once in a blue moon, I will use 4.236. If you have a runaway market, a lot of times you'll see, the market maybe falter at that ratio. Now, I told you where the 618 and 1618 basically comes from. It's in between those numbers. But what about some of the other ratios? They are all related mathematically. So for example, we got my little arrow here. So the 1 minus the 618 is going to give you 382. Square root of 618 is going to give you 786. Square root of 1618 gives you 1272, and so on. There's quite a few examples, but just know that, I'm using all of these, but they're all related mathematically. Okay, so now I'm going to go over some of the basics. We're going to start with Fibonacci price retracements, if you're not already familiar with them. Basically, what I'm doing here is I'm going to measure a prior low to high swing and use the retracement ratios of 382, 50%, 618, and 786 for potential support. Okay, so you run those all, and then you watch those areas and look for potential support. Just reverse it for the flip side. I'll take prior high to low swings on the same chart, and I will use these same ratios looking for potential resistance. But we're not really going to focus on using single levels, okay? It's going to get a little bit more involved than that. So I'm going to give you a quick example of a retracement here. So this was a daily chart of the stock Square. I measured a low to high swing, ran the retracements, and in this case, you didn't really see, you got maybe a stall at the 382, didn't really see anything at the 50%, but at the 618, that one ended up holding. So your question is going to be, which retracement do you trade against? But by the end of this presentation, you'll know the answer to that, or at least what I use. All right, this next example, again, simple retracement. This is a 30-minute chart in AMAT stock. I measured the prior high to low swing, ran the retracements. You did have one move off of that 382 retracement. You had kind of a micro move, just a little bit through that 50%. But again, we ended up seeing a pretty healthy reversal at the area of the 618 retracement. All right, let's see. That's pretty much it for retracements. Now, Fibonacci price extensions, that's one of the other price relationships I watch every day. There are essentially retracements beyond 100%. I'm still using only 2 points on the chart to find them. And you basically just add these ratios to your retracement tool and they should show up. So for example, I'm going to measure prior low to high swings, run the extensions of 1272 and 1618. And then, also 2618 for the that third target. And we're going to look for possible support at 1272 or 1618. I'm going to do the same thing for the resistance, but, flip it around, take the high to low, use those same ratios off of that swing, and look for potential resistance. So let's look at a couple of those examples so it makes a little bit more sense. So here is a daily chart of Facebook. And I actually have 2 examples on this particular chart. So here's one of the price extensions with this prior high to low swing in Facebook. And note that at the 1272, you had a big failure once, and then you had another pretty healthy failure a second time. Nothing really happened at the area of the 618 in this case, okay? We don't know which of these levels is going to turn the market, so we basically combine this with triggers to see if it's worth actually, looking at a trade against it. So the second example on the same chart, another prior high to low swing, ran the extensions here. Didn't really stall at the 1272, but we did hit that 1618 area, you went maybe slightly through it by, a few pennies at that 184.10 area. And we did see a healthy decline of $15.24 after hitting that second extension. Okay, I may have a couple more examples here. Here's another example in the stock Intel. This was a daily chart of Intel. I measured a prior high to low swing. I ran the extensions. 1272 didn't do anything. In this case, and again, I'm not looking for perfection. We're looking for things to be close. But in this case, this was exactly equal. So 5085 was the extension and 5085 was the actual high in this case before it dropped $5.80 on this chart. All right, let's see. Okay, one more example of a price extension. This is in the much bigger picture because this is a weekly chart and it's an old chart, but it's still a good example. So this was CMG on the weekly chart. This market was going straight down. It was ugly. So, you kind of back up from looking at the daily chart and look at the bigger picture. And I was looking at that to see where we could put in a possible low. Well, the 1272 didn't really do anything at 313.24. But we did have the 1618 extension that came in at 262.71. Now, again, it's not perfect. The actual low was 263, which was close enough. I kind of look at it visually, and if it looks like it's holding and hasn't gone like way through it, that it's still good as far as a price decision. All right, let's take a look at price projections next. So far we've looked at rate tracements and extensions, and those both use 2 points on the chart. The Fibonacci price projections use 3 points on the chart. So this is where we're essentially comparing swings in the same direction. I've got a prior low to high swing, and then you project from another low using, the 3 points, 1, 2, 3 clicks of the mouse. I always use 100% for what I like to call symmetry, and sometimes 1618 for these projections. But if I measure a low to a high projected from a low, I'm looking for possible resistance. And if I take a high to low projected from another high, then I'm looking for possible support using these ratios. And again, I'm going to take questions later because I need to focus on my timing here. All right, so next chart is another example of a price projection. This is in crude oil. This is a daily chart. And here, I've basically taken a prior high to low swing and started comparing it to the next swing down that we started experiencing. Now, this high to low swing was $3.12. I projected 100% of that from the next high to anticipate possible support. That 80 at 55.88. It was $11, which is very similar to this price. So it held. It had a nice rally to start with, but we ended up staying above it. So a lot of times I'm not going to erase this because I want to know if it retests it, because if it retests it, it's still valuable. Okay, we did not break it. So then we ended up having eventually a really beautiful rally off of that symmetry support. And what did that take as far as work? 3 clicks of the mouse, click, click, and click. That's it. Okay, so some of it's simple. All right, let's take a look at another projection example. This is in Google on a 60-minute chart. Now in Google, I took a prior low to high swing. I ran the 100% projection and the 1618 projection. The 100% didn't do anything. Okay, the market blew right through it. But it's good that you knew where the 1618 was, because this is pretty much what capped the market. The actual resistance came in at 1097.88, and 1097.51 ended up being the actual high. And you can see that we did have, a healthy pullback after this. Now, typically, if you know that there's resistance coming up with one of these extensions, you want to ratchet up your stops. I mean, some people might just ratchet up, let's say using a prior swing low or something like that. All right, let's take a look at another example of a projection. Now, this is a 30-minute chart, and also this is a good place to talk about symmetry. Now, symmetry is similarity or equality when comparing swings in the same direction. So here we've got two swings that are very similar, 91 points and 90.25 points. And what we did here was we basically took the prior low to high swing. Again, where you can see that was 91 points. And then from any new low, we would have projected that as possible resistance. But, you know, we didn't quite get there off of this low, but we did here. The projection came in at 30.97. The actual high was made at 30.96.25. And the S&P on the 30-minute chart eventually rolled over 243 points off of what? 3 clicks of the mouse. 1, 2, 3. Okay. So if you want to just use symmetry because, you know, you think that this is a little bit too much work for you, you know, that's something that you can start with, and you should be able to make money with it, especially if using it in the direction of the trend. In this case, we would have wanted to look at the sell side because we did have a pattern of lower lows and lower highs at the time. All right, let's take a look at an example in Bitcoin. Now, this is actually the continuous futures contract. And again, I'm running all possible price relationships, but in these examples, I'm just showing you the ones that have hit at this point because I want you to, you know, see where I'm coming from. Some of the other charts, you'll see everything come together at the same time. Now here, what we had was a prior low to high swing that was 157.50. You can see up here. And we had another one, low to high swing, that was 171.90. And then we also had a low to high here that ended up being 158.35. Well, you can see that there's a similarity with this swing and this swing. The projections came in at 65.115 and then 66.555. And you can see that, you know, the first area is what held. It reversed, and we did see a decline of 12,380 off of that simple resistance. Now, in this case, obviously there was, you know, click, click here, projected from here, click, click here, projected from here. Okay. Now let's take a look at, all right, price clusters. So a very powerful trade setup that I use every single day is called a Fibonacci price cluster. The definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. Now here, I'll warn you, it's a trick question. So what would have told you to look at a buy in Tesla before this rally occurred? Why was the June 11th low potentially important? And I don't expect anybody to get the answer unless you've seen my work before. So let's get into it. All right, so this is the same chart of Tesla. You're just not seeing maybe all of the chart at the same time. But here I had a symmetrical projection of a prior high to low swing. $19.81 projected from here gave us 167.07 for potential support. Okay, then on the same chart, we had another symmetry projection. We had a high to low, $31.90. I projected that from here, gave us some support a little bit below, 166.97. Okay, the next chart is also Tesla on the daily. And here, this was just a little minor extension, but you know, it still has value. This low to high extended to the 1618. That came in at 167.43. So what, we have 3 price relationships so far, but we have another, and that is the 1272 extension of this prior low to high swing. That came in at 167.23. So this is what it looks like when it all comes together. Okay, and some of you have seen my charts, hopefully on Twitter already, and they kind of look like this. You know, it's a little bit of a mess where you cannot see these numbers. That's why I have to write the numbers out. And we basically had 2 100% projections, a 1272 extension, and a 1618 extension. We hit the zone, we held the zone, and it was followed by, well, up to, when I printed this, a rally of $103.59. Okay, but what would have told you to take that trade? That's the next question. This is what I call a trade setup. This is a price cluster setup. Well, I like to use what I call a trigger. The trigger is essentially the price action that indicates that it's worth placing a bet against that zone. So basically what I'm looking at, as it moves into support, I want to see the 834 EMA crossover to the upside as one part of the trigger. So that was right here where the 8 crossed above the 34. But I also like a more confirmation by seeing a pattern shift. And what I mean by that is over here on the left, I see a pattern of lower lows and lower highs. Okay, so I'm basically looking for it to shift to potentially higher highs and higher lows. So when it took out this prior swing high, that was the beginning of a new pattern of higher highs and higher lows. Okay, so when both of those things occur, you take the trade. A lot of my traders use options, and you can then place the stop either underneath the low made prior to your buy trigger or underneath the low end of the zone, which I gave you on the prior chart. And I'm sorry if this is a little bit fast for you guys, but I want to kind of make my time window so I'll have time to answer questions. Here, this is a secondary entry after that original setup. Okay, and that's what we do. I mean, if you miss the original setup, we always look for secondary entries. In this case, after putting in the low here on June 11th, we had symmetry from this prior high to low projected from here, from this prior high to low projected from here. And then we took this low to high and had the 618 retracement, came in at 175.82 to 177.37. That was two 100% projections, a 618 retracement. And that came in on June 14th. And again, very, very healthy rally. And then at that point, your risk would have been defined underneath here instead of underneath here. Okay, so that's a secondary setup. And you can also go to the lower time frame charts to do that. All right, here's another example. This is in the gold market. And here we had a price cluster that included a 100% projection, a 786 retracement, and a 382. So we had a 786 of this low to high. We had a 382 of this low to high. And then we had a 100% projection of this prior high to low projected from here. That was a decline of 62.20 versus 61.90, which is, very similar. It was within 30 cents of, well, the zone was 27.56.40 to 27.59.90. The actual low is 27.60. So yeah, that was within, 30 cents of the price cluster. That is absolutely close enough. So again, what we look for is we look for a hit and a hold of the setup. If it does hold, we go down to a lower time frame chart and we look for a trigger. For example, on the daily charts, I like to use either a 15-minute or a 30-minute chart if you're going to look for a swing trade entry. Okay, you don't want to wait for the trigger on the daily chart because you get in, it will get you in by the time that the setup is over. All right, here we go. Let's see what else we have. Okay, here's an example in TLT, if anybody follows that ETF. I had symmetry. I took this prior high to low of $3.39, projected it from this high. This ended up being $3.31, which was very similar symmetry. Then I had a 618 retracement of the low to the high, came in at 86.91. Then I had a 1272 extension of the low to the high that came in at 86.68. So we had the three levels. So that met the criteria for a cluster. It hit, it held, it triggered, you had an initial rally. You even had a secondary entry right over here when it pulled back. And we had, at that time, a rally of $4.64. Another example, this is in the WM, where I measured this one 528, projected both of those from possible support. We also found a 618 retracement of the low to the high. And then there was a 786 retracement of the higher low to the high. That gave us a zone of 194.80 to 195.19. The actual low was made at 195.02, which was directly within the zone. It hit, it held, it triggered, and the rally at that time was $9.14. Okay. And the risk reward is typically very good in these setups, you know, especially if you're looking at a daily chart, because the risk is going to be like, maybe you're going to get in around here, but the risk is going to be to here versus the potential reward much, much larger. So what's good about this methodology is that, you know, first of all, your risk is defined and you do have the potential targets, but the risk reward is typically very good. You know, unless you trade maybe micro charts, maybe it won't be quite as good. Another example, this is actually a daily setup in Netflix that I had a while back. Now we had pulled back into this support, but you don't have to wait for a swing trade trigger. You can actually use a 1-minute chart where there's going to be a bit less risk for you and start out as a day trade, but then maybe keep it overnight if it also, you know, moves in your favor enough for you to keep it. So let's see, that zone was 660.55 to 661.48. You can see there's at least 3 levels there. And this next chart should be the trigger. Yep, here's your trigger. So that was Netflix. Here was where the low was put into that zone. Here's the prior swing high that we took out as part of the trigger. Here's the moving average crossover. That was the rest of the trigger. And it would have triggered around the 664 area. And again, very healthy rally. That's on a 1-minute chart. Okay. So if you're a day trader, this step is great for day traders and swing traders. All right, let's see what else we have. This was an example in JP Morgan. And here I took these 2 prior swings and then projected from this high. You know, obviously, you know, this wouldn't have been there when I was first setting this up. You wouldn't have seen this. So I ran the projections. I also had a 382 retracement. Oh, that must be, yeah, the 382 retracement of this swing, 786 retracement of another swing. We had a cluster at 228.96 to 230.09. And again, these are the price relationships that came together there. It hit, it held, it met 2 targets. The third target would have been the 2618. Now the 1272 is met a higher percentage of the time. A lot of times you'll also get the 618. It's a little bit more, you know, it really depends on, you know, what the market's looking like for it to get to the 2618. But once you get to the 1272, you're going to hear me talk about trail up your stops, because many moves tend to terminate at extensions of prior swings. I'm going to give you an old example of S&P cash daily. Now here I had a very, very healthy area of resistance at 51.43 to 56 area, but it tells you something. If the market blows through a zone, it tells you something. Okay, it tells you that it should keep moving in the same direction, you know, at least until we get to the next area. So watch these areas as decisions. They do define your risk. All right, let's see. Okay, this is another recent one. I did post this one. I did a video on it on YouTube also. This is a weekly chart of Apple. Now, I don't know if it's going to work, but I mean, it is starting to work at this point. But this is basically a 2-step pattern for me, where I have this swing very similar or equal to this swing with the zigzag pattern. I also have an extension in here of a prior low to high, or actually there might even be another swing here that the 1272 came from. And there's also a 382 retracement here. The zone came in at 208.17 to 72. It hit, it held, it did trigger. Now, the potential is really, really healthy here, because with this bigger picture pattern, if it plays out fully, this is actually target number one. Now, I'll be happy if we at least get into the next resistance areas, which would be around the 234 area or 239 to 241. But what you have to do with this market is take it from one decision to the next. I did do another video on that, showing you where some of the resistance had come in on the daily chart that we were going to need to clear if we were going to continue to rally from that support. Okay, so we want to take the markets from one decision to the next, because just because I give you a target doesn't guarantee we're going to get there. So, you know, you want to have at least a break-even stop, and typically better than that when you're looking at these. Okay, we're going to go into Fibonacci timing next. Not everybody is familiar with that. I've been using it for years, though. I met my mentor, Robert Miner, right after the crash of '87. And I mean, the light bulb went off when he showed me this in the presentation. So for timing, we use the same ratios that we use on the price axis of the market on the time axis of the market. For example, we're going to measure the time between a prior high to high swing, for example, and then multiply that time by the ratios and project the results into the future. When we see time clusters, which would be the coincidence of at least 3 or more timing parameters, we look for a possible change in trend. If the market is going straight up into timing, we anticipate a pullback. Now, if the market's going straight down into timing, we are going to look for, you know, possible low and reversal back to the upside. If the market is sideways, you pretty much want to ignore it. Okay, you might get an acceleration at that time, but you know, we're not looking for a reversal if it's going sideways. Also, when time and price come together, you have a much higher probability trade setup. So this is an old example that I had in Facebook, where I had a really nice price cluster at this area. So that's great. You know, it hit, it held. If you use that, you would have made money. But you'd had more confidence if you also knew that we had a cluster of timing cycles between July 19th through the 21st. So here, I measured a high to high cycle, projected 618 in time forward that came in on July 19th. There was a low to high, 100% in time came in on July 20th. Another low to low swing, 1618 in time came in on July 19th. And then a low to low cycle, 786, July 21st. So the 19th through the 21st, the market was pulling back into support at the same time that we had timing. So time and price came together. We had a beautiful rally of $43.05 off of that support decision. Okay. Now, I did show you, I believe, that other chart that gave us the high recently in NASDAQ. Again, I run that timing on the cash charts. But then also, what you have to look at next, because obviously, you know, the next thing we're going to do is set up a new. Now, I don't know where it's going to hold or not, or if we're the downside. So you take this work from. If you get short against this resistance and we move down into support and it doesn't break it, trail down your stops just in case. If it does break it, then you can look for more on the downside. Then we have, well, the actual NASDAQ futures contract. And there are going to be other numbers that come in before these levels. I actually have them on my 120-minute chart. But in this example, this is the daily chart that I did this today, a few hours ago. And I have, you know, some areas that really stand out. Actually, this is the larger zone. You can break it down into smaller zones. But here, 199.17 to 199.96. But you can break it down into this is one decision. And then we have this decision with, 618 and symmetry. That's another decision. And 199.96 can be a decision. But bottom line, we're looking for the market to, if it does come down here, it doesn't say that we're definitely going to go there. But if we do come down here, we know it is a support decision. If it holds, we're going to go down to a lower time frame chart and look for a buy trigger. If it doesn't, then we could see more on the downside. All right. I guess I didn't update this one chart recently, but here's another recent example when we were rallying in the S&P cash. Now, what I had done at that time was I had projected timing for the next possible high from this last low. And the market, or not the market, the program spit out this histogram. And what that represented was these dates, February 19th through the 21st. Since the histograms have a directional bias, if I project from a low, I'm looking for a high only. Or if I'm projecting from a high, I'm looking for a low only. So in this case, we're looking for a high between 219 to 21, or, a possible high. Actual high was made on the 19th. Market rolled over. You also had, many of you have heard me talk about the 513, rolled over to the downside. You want to be trading on the side of that. So once the 513 crossed to the downside, you wanted to focus on looking at selling the bounces instead of buying the dips. But that's another timing example. And this is what the histogram looked like that came out of the program. And it allowed me to put it on the chart below the actual price action. So here it showed me that there was, a cluster basically of cycles. If you look over here, you see where the highest scoring dates are. And that was, again, 219 to 221. And that's what told me to use that as a time projection. And, typically it's going to be, I talk about my timing every single night in the evening updates. Now, I do have two people that are running the trading room for me now, since I am semi-retired. So that's Tammy Marshall and Shannon Fitch. And yeah, they do that. But what I do is I still do the end of day update. I do some extra charts. And in the update, I get everybody prepared with the daily charts and also the timing work. Here's another example of actual time and price. Again, this was NASDAQ cash daily chart. Beautiful symmetry here where I had a prior low to high that was 2501.19. And this, again, not perfect. This was 2503.51, but you can see here was where the projection came in. It overlapped a 786 retracement. So 199.36 to 199.94 was the resistance. And symmetry by itself is actually a setup. You don't need 3 levels to take a trade against that. But the actual high was made at 2503. Wait a second. No, sorry, 199.38, which was directly within this zone. And you can see that a healthy decline followed. But that was just the price aspect of it. The timing aspect, we had a high to a high, 618, August 22nd. Had another high to high, 100%, August 22nd. Another high to high, 100%, August 23rd. A low to low, 50%, August 23rd. A high to low, that would be this high to this low. 786 in time, August 23rd. So August 22nd, 23rd was the time window for a possible high. And the actual high was made on August 22nd. Okay. And again, I'm not going to tell you this is 100%. There are a lot of times where we will have time resistance and we will watch it, but it doesn't trigger an entry. Those you have to leave alone. Then there are times where we do have it. It does trigger an entry and then you get stopped out. They're not all going to give you amazing reversals, but there are a lot of them that will. Okay, let's see if I have anything else here. Yeah, looks like I have time to look at this one also. This was another cluster via S&P Cash daily chart, high to high. If you took the time between this high to high and multiplied it by 1.272, and then projected that from this high, you're going to get July 16th. Then we had another high to high. 786 came in on July 16th. Another high to high. 100% came in July 17th. A low to low swing. 618 in time came in July 18th. And another low to low 100% came in on July 15th. And yeah, the first time I did actually forget to include the 15th. So it was the 15th through the 18th. And then low to low, 1272, July 16th. Another low to low, 50% in time, July 17th. So grouping of cycles between the 15th through the 18th, market was going straight up into it. Actual high was made on the 16th, followed by a decline of 550.41. All right, that's pretty much it. So if you have a question about a specific chart that I went over, I'd be willing to go back and go through it with you. I believe I do have enough time for some questions here. So if you have any, I'm looking at the webinar chat at this point, and I'll see if I can help you with anything. Oh, also, if you're interested in checking out the trading room, which includes typically a morning video by Tammy, and then I do the afternoon video. But also we have 8 charts up all day long. We have the S&P futures. We have a 120-minute chart and a 10-minute chart. We have NASDAQ futures, 120 and 10. We have NVIDIA, Tesla, Apple, what else? I know Amazon, and those are the 8 charts that we look at there. But we do a lot of other charts, including requests twice a week, in case you want to look at something, that you like. So when do you use 2 points or 3 points? Well, I look at everything that's possible. So for example, I see a reason to use 2 points for a low to high retracement, 2 points for this low to high retracement, but I also see reasons to look at 3 points here, high to low projected from the high for possible support, and so on. So I do all the price relationships, and actually I started doing some videos that do this. They're typically 3 to 4 minutes long. They're on my YouTube channel, which is under Queen of Fibonacci, if you want to check those out. I do plan on continuing to do that because, it's bite-sized pieces and people can learn from it. You could also recreate it yourself. Anything specific that I look for as far as trading options? I guess it really depends as far as like how, what are the dates that you should use on the options? I mean, a lot of times I'm looking at least 30 days out if I'm looking for, a little bit of a swing trade, more than a day trade. But, there may be times where you do something else. I know that there are a lot of people that I used to work with at Simpler Trading that did butterflies, they did call spreads, they did put spreads, there's a number of different ways that you can, use options. I mean, obviously you can use the outright options, but if the market gets stuck for a while, you start losing the time value and all that. I am not an options expert, but I know that a lot of people do use them successfully with this work. Are there any other questions? And sorry if I went a little bit fast because I knew I had 46 slides and I wanted to make sure I got through them all. You might actually be able to slow down the recording, though I might sound a little funny. Okay, last chance for questions. Otherwise, I can wrap it up. Also, if you have any questions for me that you want to ask later, I'm going to give you an email. I'm not sure if this is listed somewhere. I'll give you my Gmail because it's kind of embarrassing when I give out my AOL account. All right, so I don't see any more questions at the moment. So I can give it back to you. And then again, would look forward to meeting some of you if you do the trial in the trading room, because I'm not in there all day long like I used to be, but I do pop in, and if there are any questions that come up, I do answer them in there also. All right, well, thanks for having me. We did have timing at this low, and we were close to that 618 retracement via the weekly chart. And then here we also had, you can see we had the time resistance in the case of S&P cash. So we knew that if anybody was long futures, that in the update last night, I was warning that you better ratchet up those stops. But now that we're getting a pullback, I definitely want to start looking at some of these areas. For example, this one looks very healthy. It might be relatively wide, but it's worth watching. 5670 to 5681 area. It looks like honestly, there's at least 6 price relationships in that cluster zone. So I do want to look at that because obviously there's a case for both sides. We know that we had timing at this last high, and maybe it continues down, but this is your next big decision. And if it hits and holds, then you go down to the lower time frame chart, look for your trigger. If you get the trigger, you're looking for an extension to the upside, and you're going to have a stop right underneath here. So that's one thing. Let me check what else I have. Again, a lot of times, there's different setups on different time frame charts. One of the things that really helps when you're trading is if the daily chart, for example, is in agreement with the lower time framework that you're looking at. Okay, that's extremely helpful. It's not always going to be that way, but we always do have, the decisions to look at. I'm going to see what else I can give you here. Okay, here's the June contract of NASDAQ futures. And here's the zone. Again, we can break it down into some smaller zones. I'm going to do the update after the market closes here. But I have this general zone as an important decision. I don't know if it's going to hold or not, but I do know that it's an important decision, and that if it does hold and it does trigger, that I have a reason for a trade entry. So 199.17 to 199.96. Let's see, IWM. I do have some levels on IWM. It looks like, well, we went through some of this, so it looks like 204.58 to 63, but then also like this 202.52 to 203.73 and so on, we'd be looking at. And I know I also have some other charts. One of the things that you have to do when the market is like the way it has been recently is you have to back it up and look at the bigger picture, like I did in Apple. I also did that in the case of Amazon. And Amazon did hold weekly support, but I cannot tell you if it's going to continue to rally from there towards this target, or if we're going to, fail at resistance and roll over again. But you only act on what you know, which is that this was price support. It held, and it triggered for a trade. And there has been a rally, but there's also resistance that we're watching on the way up. And our 30-minute charts are going to give you possible support. And this is one of the charts that will be up in the trading room tomorrow. And then we also had Google on the weekly chart because, when this starts, going down like this, and you had the moving average crossover here, and then you're back below the 50 simple moving average. Like, well, actually, that's what it looked like on the daily chart. Then you have to kind of, back it up and look at the bigger picture. Well, bigger picture didn't look as horrible. And we had this support, again, not a perfect hit, 156.72 versus 157.39. But you have seen a little bit of a rally from there. And then we had the next decision was resistance that we just failed to clear. So again, when you move up into resistance after taking a trade, ratchet up your stops because you have to be prepared for the failure. NVIDIA did have some nice support on the weekly chart also, but the fact that we have not been able to clear this resistance is worrisome. And let's see what else. Tesla, everybody loves Tesla, right? Anyway, here, we've got mixed parameters because I finally did get a 513 crossover to the upside, but here's your resistance decision. If you wanted to make a case for the bears, this is resistance that you would define your risk above. If you want to look at the buy side, I'm going to look more closely at anything around symmetry. So maybe this 258, 261 area, down to the 618 retracement. If it holds one of those and then triggers, I'm pretty interested in that. Also, I did have some time resistance in Tesla. So we knew that it was a good time to ratchet up stops. But one of the things I want to tell you about timing is that, it came in 26th, 28th, but I always look at it plus or minus a day. So that means the 25th through the 29th. And, 25th is when the high was made. I'm not looking for perfection. I am a Virgo, but I know that you can't be perfect or you'll never get a trade. Then we have, let's see, I've started running the new support in Tesla on the 30-minute chart. One of the areas that stands out is 258.90 to 261.26. Gold has been a much better market to trade recently because we had price above the 200 simple moving average, price above the 50 simple moving average, and the 513 EMA combo was on the buy side with the 5 above the 13. When all of those are together, and then you also get a trigger on the lower time frame chart, it's a higher probability setup. Now, if we continue to hold above this low, my first target is 3109.50. And then crude, I do have, again, one person looks at one time frame, somebody else looks at a different one. I do have a sell setup on the daily chart. Okay, so the 513 is bullish at the moment. It is a setup. Now, if you look at the 30-minute chart, though, it's setting up on the buy side. So again, these two charts are not in agreement at this point. But what you have to decide, instead of getting confused, is what time frame am I trading? If you are trading the 30-minute time frame and you are a trend trader, then you're going to look at the buy side. And I think, let me see. Okay, question is, does the chart pick up any analysis for probability of making the expected move? No, I don't think so. I mean, I run the setups. I tell people that the way to make money with this work is setup plus trigger equals trade entry, and then you manage it. Okay, I'm gonna strangle that. Wait, let me just get these other charts over. Okay, here it is. I'm just trying to open my next grouping of charts. Here we go. Using my third set here. But bottom line is you want setup, and that's going to be either a price cluster setup, a symmetry setup, or a two-step pattern setup. Plus trigger. Trigger is going to be a moving average crossover. You can use the ones that I recommend, or you can, try your own, test them first. And then you manage it. And the management includes where your initial stop is placed, when you're going to trail it up, and then when you're going to exit. But I think sometimes the best way to exit is to just use a trailing stop, because some people will get out of a trade at the 1272 extension, and then they'll get out, and then it goes to the 1618. I would rather trail up a stop, because then you have the chance to get to the 1618. And I just wanted to look real quick and see if I had, yeah, like, you know, I have stuff. I have a buy set up in Microsoft, a little bit below the market. I have a couple of areas in Netflix that we're looking at. Meta, a really good zone would be this 595, 597. Bitcoin, well, it did hold this zone, and actually I did not set up the new support yet, so I will be doing that in tomorrow's session. And let's see what else we have. Oh, my computer's getting tired. We had resistance here in the Dow Diamonds at, you know, these areas, anywhere from this 427 to 429 area. And we did roll over from there. For example, let's see what a 1 minute chart would have looked like as far as a trigger. Okay, so I will do. Chart or template. No, wait, maybe I should use a little higher time frame. Okay, 427.92. Okay, I think that was up here, but sorry, but my program's not bringing in enough data, but it would show you the crossover against that resistance that you would have seen in the diamonds. And then the next decision, I believe I had already done that earlier today, but when I closed the program, it disappeared. And I'm going to just redo that real quick. Low, whoops, we're going to do low to high here, low to high here. All right, so then I have another zone. I'm more interested in, you know, where this 618 overlaps symmetry. So this would be a buy setup right here, 419.19 to 419.52. And we probably have at least, including the 10-minute charts, we probably have 20 setups a day. Some of them will be on the daily chart. A lot of them will be on the 30-minute or the 10-minute charts. And that's, well, one more. I had Rivian. It is failing at resistance right here, but this is another one where all we need to do is run the pullback. So high to low, projected from the high, high to low, projected from the high, low to high, retraced, low to high, retraced. Get rid of anything the market went through. And the area I would focus on for a new buy would be $11.31 to $11.64. What would my risk be? Underneath 11.31. And that's pretty much it. So I think I want to leave you time to set up for the next person. And thank you for listening and joining. Like I said, you have the email if you have any questions, or maybe we'll see some of you in the trading room.